Hello everyone, welcome to your own channel Daily Commodity. Today's topic is what is commodity, different types of commodity, what is gold and different factors which affects the gold prices. Let me remind you, if you have not subscribed to our channel yet, please do subscribe to our channel and press the bell icon to get all the updates from Daily Commodity. Now let us discuss what is commodity. A commodity is nothing but a good or a raw material that people buy and sell. A commodity is any tangible good which has monetary value. What is tangible good? Tangible good means the good which you can see, touch and feel. A commodity is an asset. There are two different kinds of commodity, hard commodity and soft commodity. Hard commodity is typically natural resources which are extracted from the ground. For example, gold, silver, zinc, oil, rubber, etc. Soft commodity. Soft commodity are mainly agricultural products or livestock. For example, wheat, coffee, sugar, soybean, etc. There are various factors which affects the gold prices. Now let us know what are the 7 factors which affects the gold prices. First, demand and supply. As with any commodity, the balance between the output and the market demand determines the price level. When the supply level diminishes, price tends to go up. When the gold price increases, mining gold becomes more profitable, so more supply comes on the market. The opposite happens when the price declines. Second point is inflation. Gold, due to its almost steady character as compared to the currency, holds significant value. It is also used to hedge fund inflation. That is why the investor prefers gold. When the inflation is high, the demand for the gold increases, and vice versa. Third point, interest rates. Interest rates on the financial products and services are tied closely with the demand for the gold. Current gold prices are generally a good indicator of the interest rate trends of any country. With the increased interest rates of the interest, customers tend to sell the gold to acquire cash, and as such as increased supply of the good leads to reduced rate of the metal. Fourth point, Indian jewelry market. India loves their gold jewelry, be it festival or birthdays. Gold jewelry holds a special place in Indian household. The demand supply mismatch leads to raised prices. The demand for the gold does not just end at the jewelry requirement. This metal is also used in a small quantity by the various electronic companies for manufacturing the devices like television, computer, GPS, etc. In India, gold is used for the jewelry requirement as a gifting article for showing off the wealth as well as a strong hedge against the rising inflation. Fifth point, government gold reserve. Central bank of most major countries holds both currency as well as gold reserves. When the central bank of the large countries starts holding gold reserves and procuring more gold, the price of the gold goes up. This is because the flow of the cash in the market is increased while the supply of the gold goes down. Sixth point is import duty. Any global movement in the price of the gold affects the yellow metal in India. India is one of the largest importer of gold as well as when the import prices changes, the same is reflected in the price of the gold in the Indian market. Seventh point, currency fluctuation. Since the value of the currency as well as the other financial products may fall, gold is seen as a safe investment by the investor and the price of the gold is expected to rise in the time of the political chaos. Now let us know why sometimes gold prices are rising. Since the March 2020, the COVID-19, most of the country has implemented national lockdown. It has caused a huge economic disruption because the business was shut, the import exports were cancelled. Government also announced the several economic packages for the people. Considering gold as a safe investment, people started believing and started moving away from the risky assets. How gold can be affected much. First point, high liquidity. Gold is considered to be liquid due to its property of easily converted into cash. There are a large number of the investors who buy and sell the gold around the world. It is treated as It is treated by some as a commodity, but it actually behaves more like a currency or hedge at the inflation. Second point, reducing gold mine. The supply of the ground gold is limited, so the gold deposits are difficult to find, plus extraction of the metal from the gold mines is expensive plus time consuming process. Exchange rate. Indian rupees has fallen sharply since the lockdown. Currently, it is around 75 against the US dollar. Since India is the second largest importer of the gold, such exchange rate fluctuation impacts gold prices in India. Fourth point, rise in the international gold prices. The price of the gold in India is affected by its international price. Over the last few weeks, rising number of the COVID cases, increasing US and China tension, overall economic slowdown have led to a constant rise in the gold price around the world. Once the investors lose hope of the market recovering in the short term, they tend to gravitate towards safe havens like gold. Have you ever wondered where this gold comes from? Miners extract gold from the ground on every continent except the Antarctica. If you like the video, please like, share and comment. Thank you.